Today I will do a little something different than I normally do, which is primarily deep dive kinds of crypto content, and I will pivot to providing my takes on the traditional investment advice that comes from the types of Warren Buffett and the recently deceased Charlie Munger as well, and explain why I choose to think more like Mark Cuban, even though I don't agree with a lot of his more personal and political views. He lines up a lot more with my line of thinking for how I am approaching crypto. And obviously, this is not financial advice, it is an explanation of my thoughts and opinions and how I choose to approach things, which are a little bit more risk tolerant than a lot of types out there. And why am I actually talking about this? Well, I and a lot of others who know a lot more about crypto than I do think that at the peak of our next bull run, probably sometime between mid 2024 and mid 2025, we can see a crypto market cap of about 9 to 11 trillion, which would be between 3 and about 3.5 times of our last high that was about 3.1 at its top. And a lot of people get caught up in the investment philosophies where you are approaching it like a retirement account or a 401k or an IRA. And there's not anything wrong with that if long-term accrual of wealth is your primary goal. However, the thing that I have a major issue with is that these guys didn't get as wealthy as they are by just investing a little bit over time. They went all in at some point, but the guys like Warren Buffett didn't particularly go as all in as people like Mark Cuban. So I want to actually explain why I approach things a lot more like Mark Cuban than Warren Buffett. So he is worth about so I have it here, about 110 billion as of November of 2023. Charlie Munger, who was the vice chairman of Berkshire Hathaway, was worth approximately 2.5 to 2.6 billion in November of 2023, and these two were quintessential in the massive success of Berkshire Hathaway, which is worth around 780 to 790 billion as of right now. But it's not that their long-term buy and hold philosophies actually got them there. That will work, but it won't work for the average person who is trying to quote unquote get rich off of crypto right now, so that we can go and invest that newfound capital in things that will actually make us an income. And that is what I am the most interested in crypto for at this point in time. So how did Warren Buffett and Charlie Munger actually make their money before Berkshire Hathaway? Well, primarily for Warren Buffett. He worked really hard in order to get into the financial position that then put him in a position to get into Berkshire Hathaway. But he first created his own investment partnership in 1956 and pooled a lot of investment capital there, which then in turn performed extremely well. But his philosophy concentrated on finding undervalued companies that have a lot of potential and all about long-term holds. Not exactly the same thing for Charlie Munger. Ooh, I apologize about that one because he came from the law end of things, but he was also an active investor and controlled an investment partnership as well. He then got involved with Warren Buffett in the 1950s and then came on to Berkshire Hathaway as well. He was also a long-term undervalued company investor, and he was known for having a lot of patience in order to find the right times to actually get in. So in short, the investment philosophies of these two are all about long-term holds. If you aren't willing to hold for 10 years, you shouldn't even think about owning it for 10 minutes, which for us as an average person out there, we don't really have the income that will generate these massive successes in the short and midterm in order to put us in a position to then reinvest that and be even more successful in the mid to long term. So if we go, and I did ask ChatGPT to explain why that isn't really the best fit for the average person. Well, that is because of a number of things. Yes, because they were involved in the investment industry, they had a lot of inside information and a lot of experience and connections that were able to get them into the right things at the right times. But probably more importantly is that they had a large capital base up front. And it's not that that impacts the percentage of your returns on investment, but a 10% return on 100 million is a lot more than a 10% return on 100K. And it is the same percentage. You will get that same return over time. However, we're most interested in the actual raw value of that return, not that percent, because you can't really do as much with that 10% of 100K as you could with 10% of $100 million. You can't really go out and invest in high return opportunities with 10K. It's just not really out there unless you are able to put that into creating your own company or your own product. But those kinds of more or less overnight successes are not common at all. So if we compare that to Mark Cuban, well, he kind of has a somewhat comparable approach, but it was pretty different, and I think it's much more in line with what I am trying to do with investing into the right kinds of crypto assets right now. So let's see where it was. Yeah, so he got a lot of his wealth and success on his own, but he was able to put his initial capital into creating smaller companies and investments that in turn put him in a position to be able to create a technology company during the dot-com boom that got him 5.7 billion, which he was then able to go and reinvest in much more high value, much more raw value return kind of investments and assets. And yes, they all line up because it is more long term, but Mark Cuban's approach is much more opportunistic as well, and has gotten into a lot of different kinds of things, from technology and into sports as well. Um, Cuban has shown that he has been able to very quickly adapt into new technologies and trends, which the types of that which the types like Warren Buffett have historically not been as willing to get into, because it was more of a perceived risk at that time. And he was able to quickly turn his dot-com win of 5.7 billion into liquidity to go invest into more and more expensive things, which is essentially the exact opposite of the long-term hold approach of Warren Buffett and all of that types. And the key differences are that Mark Cuban is much more willing to take a risk, especially in tech, which is where we are at in crypto right now. We won't make a lot by just putting 100 a month into a couple of assets. We have to really know what we are putting our investments into, and we have to concentrate a lot more on individual assets that have the most opportunity, by being able to keep up with technology and trends. For example, right now, a lot of that is really revolving around AI and AI crypto projects as well. The market philosophy is obviously also very different as well, which is a case of more traditional market analysis and fundamentals versus a more aggressive trend and technical analysis oriented approach as well. And again, he just has more adaptation to change. So it's not that you won't get a very good return if you just invest a little bit over time in crypto, and in particular right now. But in order to actually get that life-changing amount of cash to then go and put into passive income opportunities, to purchase companies and corporations that will in turn make you a much higher return than just investing in a market. And it also comes with a lot of other perks as well, because our tax code is actually written for capitalists who have capital to go out and invest. It's not really written for people who just earn an average income. So that is, in short, why I am approaching things as aggressively as I am. Now, I have not put everything that I own into crypto. I have in my opinion, a very above average amount of cash in crypto at this point in time, and I am continuing to put more and more into that as I learn more and more about current technological trends and which crypto assets line up the most optimally to perform in this next bull run in 2024 and 2025.